Good morning. Ira Epstein of Linn Associates with your morning flash update for this Thursday, the day after the FOMC meeting, and it is Thursday, and the time right now about 8:20 a.m., and this is daylight savings time. So let's talk about this on this June 17th, what is going on. The stock market is down, but folks, I want you to listen to me. Overreaction. This Fed meeting was about the dot plots moving forward for rate hikes possible in 2023. I want you to listen. This morning, I think in my morning subscriber video, I said 2022. It was early, but it's 2023. Could they move to late 2022 if the economy got super strong? Sure they could. Could inflation cause that? Sure it could. Could full employment cause them to move rates? Sure it could. But none of that has happened yet. So as you're sitting here and you take a look, if I look at the metal markets, that's not inflationary. They're all getting smashed. Look at palladium today, down $1.40. Energy, we know it's been strong, still holding, excuse me there, that 72 level. Grains, which we had that monster move up. Well, corn's down almost $1 from its peak. Beans are down $1 from its peak, a bushel. That's big money. Interest rates, do you see them moving very far? No. So I want you to listen to this and listen carefully. Nothing has really changed. The stock market's still looking good. Interest rates are not going to soar to over 2% right now. Why would they? The Fed isn't. They're not at that point. They're going to begin the process of starting to talking about when they're going to raise rates, and that can change. If you watched Robert Kaplan this morning, he was on I think it was CNBC. And as he said, the dot plot, and he started laughing, he said, at best it's a guess. And then you don't know whose plots are whose. It may not even be the voting members at that time where you see the plots closest to the market. It's ideas that constantly flow with the market, gives you an idea where the market's at today on thoughts, but that changes. If you look at today's number, the Philly Fed Business Index, powerful. There's a weak number here. New orders index fell down. What is that about? Could that be that the supply chain filled a bit and they filled everything? I don't know. But all the other numbers look to me pretty good. Inventory index, while it's up, it is well off the previous high, so they're pulling stuff out of there. This was a surprise in the jobless claims. I don't know anyone that was looking for an increase. That's the unevenness of this market. And admittedly, we're just seeing some states roll off the government programs, but this is not the way it's supposed to be going, so I'd be careful there. The Conference Board comes out at 9 o'clock with its indicators. They expect the May figure up 1.3%. The last month was up 1.6%, so that continues to show improvement. We'll see the EIA report today. They're looking for an injection of 70 billion cubic feet, which is well under the normal 87 to 88 injections, billion cubic feet that we get. But I'm looking at this reaction in the stocks, and I had some friends. I went out to dinner last night, and of course, people coming up to the table, and what do you think? And I said, it's going to be down early, but I wouldn't bet on anything. I said, I don't think that it meant all that much. And they go, well, what about the market reaction? And my answer was, markets always overreact. They're hearing that the Fed is thinking about talking about the talk. They're watching the market improve, but they have to understand there's nowhere to put money but in the stock market. Where are you going to put it? You want to go into bonds? You still have a negative return. That was my message, and I said, let me eat. All right. The one thing I don't want you to do is eat too much. Now, I was talking to these people that come up and they talk, and some of them trade through my company. You know, we have brokers with plenty of experience, and one of you pointed out right. I've got these young people in the ad, not her, nice-looking lady, but the younger people, they're right. We should have had elderly people, not old, elderly, because my brokers, they're not old, but they've been around this their whole life. You know, in the old days, you could be a broker, a runner on the floor, you start your teeth in the game and you learn it. There's no floor to do that anymore. So finding new brokers, if you think it's easy that understand markets, you'd be sorely wrong. There's no feed chain anymore. So you go there and you have to work with people that have it, and that's what we've been able to do. We have people with experience. And you pay for what you need. We'll set a commission rate that just works on what it is. The futures market is not the stock market. It is not where we get paid for order flow. And you watch, the SEC's got to look into that. While people say, well, it benefits the client, they don't pay a commission, I don't know that it benefits anyone. Do you really get the best fill?